Hey guys, welcome to this week's market focus. And before we look at the opportunities we have for next week, let's do a quick trade recap to look at the opportunities we had this week. So we had about 5 different pairs we took trades on. I think 4 pairs we took trades on, and we had fantastic trades. I'm just going to show you real quick. So going off of what we had last week, the first pair I was looking at was BTC, and we had a selling opportunity on BTC. So we went in on this selling opportunity on BTC right here, and I'm just going to show you the trade management and everything. So once price started moving in our favor, we had our stops move to break even, and then we secured 0.7% at this point, just moving the stop loss again to an area like this, securing some profit. Eventually we did secure about 2.21% at this point, and we kept moving the stop loss accordingly as price kept printing like new structure points, and eventually we closed this position on 5.52%. so price eventually reversed and took us out of this position. So I think somewhere here you can see the reverse, like price reversed, it came back and it took us out on this at 5.52%. so I'm going to show you another position we had another one on gold. I'm going to do this really quick. So on gold we had a buy position, and let me see where we started on this one. So right here, yeah, so we had this buying opportunity on gold. That was July, yep, so right here. So we had this buying opportunity on gold. We did attempt the buy opportunity right here, and as price started moving accordingly again as well, we had our stops move to break even and stuff, and then we did secure say 1.3%, and price hadn't tapped into the target point. So I kept moving the stop loss, just respecting structure points, and I didn't close this trade, and it was just a few pips away from the target point. But all I could do at this point was secure say 1.3% at this point and keep holding. And then we had price hovering around the target point for some time, for a couple of hours, and then eventually we closed this position at 3.16%. so that was for gold. Let's look at the S&P. So with the S&P 500 as well, we had a buy opportunity on this one. So I'll show you like right here. So we had our buying opportunity on the S&P 500 right here. I'll show you the trade management as well. We had so I did an initial attempt on the S&P, and price pulled back lower, so it gave me a second entry as well. So I had 2 positions on the S&P. The first one was right around here, and the second one was when price came in like lower again. So the trade management on this one, we had our stops move to break even as well, and then we secured 0.7% at this point, and we secured at this point 2%, and then moved our stop loss again. So right now we've secured about 3.27% on the S&P 500. However, I haven't closed this position yet, so I'm still holding this trade on the S&P 500 because it still has the potential to move again to a new high or something like that. And then let's look at the last one, which was US30. This one is like sweet and salty at the same time, and I'll show you why. So we had a good trade and then a bad trade as well. So let's see. Okay, so for US30 we had a buy opportunity here, and this is going off of what we had like the market forecast from last week. So we had our buying opportunities on US30. As price started moving, we did secure 0.7% at this point, and then we eventually closed this trade at 0.7% because price reversed. I did take another buy opportunity, so I did reattempt the buy on this after the NFP and stuff. I did reattempt this buys, and this took me out at -1. However, I did reanalyze the pair again, and I'm still in on the buy attempt on US30. So we made 0.7%, took a loss -1, and I'm reattempting the buys on US30. So that's it for the trade recap, and then let's go straight and look at what we have for next week. So the first thing we'll look at again is the DXY. An understanding of the DXY should give us a better perspective as to what is going to happen or as to what is happening right now. So the markets are still open, but it's going to close in a couple of minutes, in a couple of hours. So let's start with the daily time frame real quick. So I'm just going to zoom out on this and make it clear for everybody. So we've been looking at this move to the upside on the DXY. So price was tapping here, taking out highs and doing this, which was just like the characteristic higher highs and higher lows, telling you the price was moving to the upside. So that was an uptrend, and then eventually we've seen this uptrend reverse or turn now to the downside. So we had a reaction at this point of this psychological number of 106, and price could not go through 106, and we had sellers coming in. So taking this information from the daily time frame, all I have to do is step down to lower time frames and see what price is trying to show me and where price is most likely going to go to. Again, before we step down to lower time frames, because we couldn't go through 106 and prices pushed all the way to 105, and at 105 we haven't really seen prices attempt to do a reversal like this. So two things can happen at this point. If price keeps hovering around 105, we could see prices moving back to the upside to test, say, 106, and if price stays below 105, we could see sellers taking prices all the way to 104. So now let's move to lower time frames and see. I'm just going to clean this again real quick, make it clean. So let's step down on the 8-hour time frame, and on the 8-hour time frame, this is what I'm looking at. So if you remember on the daily time frame, we had prices moving to the upside, which was a characteristic uptrend, and as of now what we can see on the 8-hour time frame is we have prices tapping here. We've taken out this area, the same thing, we've taken out this area. So we're seeing lows being formed, and this low, so we're having lower lows and then we're having lower highs. So here is a high, and then here we have a lower high. So price is moving progressively to the downside. So right now we have this downtrend that has formed, and when you look at it from the 8-hour time frame, you can tell already that price is moving to the downside. Now this is not rocket science. If price, going off of the principles we use psychological numbers, and they would look for a trend. So if price is moving to the downside and we can clearly say we're in a downtrend and price is holding at, say, 105, if the buyers cannot take or reverse prices to go again to the upside, then we should see the DXY drop into an area like 104. Now, how is the DXY going to drop to 104? It can give you very complex structures. So you can see, say, a move like this, and then you get a pullback, and then you see a continuation to the downside. Or you can see, say, some kind of consolidation around 105. So at this point, you could see the DXY consolidate at this point, give you an illusion that it's trying to move again above 105, and then a step back down, and then progressively you see prices dumping again towards 104. So that's what I'm looking at on the DXY, just moving from one time frame to another. And if you step down, say, to the 4-hour time frame, the same picture you're seeing on the 8-hour time frame is what we're seeing on the 4-hour time frame. But what I'm most interested in is I'm looking at this buys that came in. This is very corrective. I'm looking at this period, the buy didn't sustain a lot. Now we've had sellers coming in, and this wasn't as impulsive compared to this one and compared to this one, but overall we're still in this downtrend. So as I'm moving to lower time frames, I'm looking at the momentum from the buyers. I'm looking at what the sellers are trying to do as well, and you can see clearly every time you have sellers coming in, the sells are impulsive and the buys is very corrective or very shallow. So we should expect another burst from the sellers again to the downside, some kind of a corrective action from the buyers, maybe to test an area like 105, and then most likely see prices dump again to 104. So now this is just what I'm looking at on the DXY, and let's look at the hourly time frame real quick to see. So the hourly time frame. So on the hourly time frame, again, everything just goes in accordance with what we're seeing from the daily time frame, the 8-hour time frame, and the 4-hour time frame. So I like what I'm saying on the hourly time frame, because once we came through 105, once prices came through 105, we had this consolidation at this area and price tested 105 and it couldn't go through, and right now we should see prices moving to the downside. So if I do something like this, just to show you, so if I do something like this just to show you, and that's why you move to lower time frames after understanding what's happening on the higher time frames, because it tells you, like, you see everything, you see the details of the move perfectly. So we came through 105, we had buyers testing 105, tried taking prices up, and then sellers came back in, and now you can see sellers coming in again, very impulsive. So just going off of what we've seen on the daily time frame, the psychological number of 105 and the psychological number down at 104, if these buyers cannot take prices go past an area like this, we should see prices move into the downside correctively. So a move down, correction, and then a move down. So my buyers on the DXY coming in for next week is to see prices move, or prices continue to the downside, say from 105 to 106, and it's going to come in, say, very correctively. So, and that's it for me on the DXY. So having this idea on what's happening on the DXY, let's look at other pairs. So the first one I'm looking at is US30, and just going off of what I showed you guys here real quick. So US30, so I'm reattempting the buys on US30, and that is simply going off of what is happening on the DXY as well, because I tried using this in correlation. So let's see, we have this. So having this understanding on the DXY, and having these buyers that the DXY is still going to drop to the downside, when we look at pairs and we start, say, with US30, I had my buys here, and this is the reason, and this is how you can get involved with US30 coming into next week. I have my trade in already. I'm just going to hold this over the weekend and manage this accordingly. So long as price doesn't take me out at this point, I'll have to manage this accordingly next week. So this was my thought process again, coming in from last week. We had prices testing an area like this, and we had this showing you the inability for sellers to go past 39,000. And once you have this inability from the sellers to go past 39,000, we should expect prices to move correctively to the upside and probably test an area like 40,000. So that's what I'm seeing right now on US30. This ability for price to move again to 40,000. So the question is, how do you get involved in a move like this? So if you've not gotten in on the buy already, what you can do is let price give you, say, a push to the upside, and once it starts correcting again, you look for periods where, or you look for your entry criteria where you can join these buys, and then you take prices again to the upside. So looking at it from this point, we should try to test an area like this, these highs, and if we can go through these highs, so this is a game plan. If we can go through these highs, or if we can test these highs and the sellers do not react impulsively to take prices lower, say something like this, and we move above this, once we test areas like this, we should see buyers coming in progressively again to test areas like 40,000. So this is going to take time. It's not a move that is going to happen in a day. It can take a couple of days, and so I'm going to hold this position on US30. And just to reiterate on this, the reason I'm still holding these buys is simply because of my buyers on the DXY. The prices is going to drop to 104, and if this happens correctly, then we should see these buys on US30 sustain. So that's the buyers I'm having on US30. Let's look at NAS. So with NAS100, we have prices moving also progressively to the upside, and I'm going to make this bigger too. So what we have on NAS100, I'm going to stick on, say, the hourly time frame, but you can look at it from, say, the daily time frame, 8 hours, 4 hours, and you have a bigger or clearer picture. And because we're not trying to make this video long, I can't really go through all time frames, but Sticking on the hourly time frame, you can tell already price is moving to the upside because it's making progressive highs and lows like this. So we came through from say 19,000, traded all the way to 20,000. We hovered around this point, tested 20,000 and started moving to the upside. And with the way this moves, it's quite easy to trade indices for me. So how do you get involved on a move like this? If the DXY has to continue moving to the downside again, you look at a pair like NAS. You could, if you haven't gotten in on this trade, what you can do is say probably wait for pullbacks to come in, so a correction to come in, and then you look for an opportunity to buy. And with looking at an area like 21,000, simply again because we're moving from one psychological number to the next psychological number, and so we're moving from 20,000 to 21,000, and that's what I'm looking at on NAS100. So there's also a possibility that we can get say a consolidation at this point, and then we see prices moving again to the upside. And that's simply because price has given you this price action previously. So you can use things like this to combine with your analysis and make a forecast and just to anticipate as to where price is most likely going to go to, simply by looking at what price has done previously. So that's my analysis on NAS100, and simply because we've had this inability to go below 20,000 and price likes moving from one psych number to another psych number, combining this with a trend line that we see on the hourly time frame, we should see some kind of consolidation or some kind of correction, and then we see prices moving again to the upside. Now there's also a possibility that this can reverse and move to the downside. That's very possible as well, but because I have this analysis on the DXY, I'm anticipating the move to the downside, then I'm anticipating this move to the upside. If the DXY decides to move to the upside, then it's going to make this very difficult, and this correction can come in, and then we see prices breaking out. If this happens, and then it's also easy for me because all I'm looking for is a correction and an opportunity to go in for the sales. And it's the same thing when we look at the S&P 500. So going off of this as well, I'm going to show you right here. So with the S&P 500, I've secured 3.27% on this trade already, and I'm still holding this one. So looking at the S&P 500, let me take this off. Looking at the S&P 500 as well, we have a similar move with what is happening on NAS100. So you have prices making higher highs, higher lows, higher highs, higher lows, and now there's a higher high. So we came through 5,500. Sellers attempted to take prices go past 5,500, say aiming for 5,400, but that didn't happen because the buyers came in again very impulsive. So with the impulsive nature of the buyers coming in, holding prices at this point and taking prices to the upside, all we can do, or all we can say, is that there's a possibility for buyers to take prices to 5,600. And now the same movement you see on NAS100 is like the characteristic movement as well you find on the S&P. So you have buyers coming in impulsively. There's a correction here which looks like a consolidation, another impulsive buy, correction that looks like a consolidation. So how do you get involved on a move like this? You can wait for the pullbacks to come in. It could come in like this, it can come in terms of a correction as well, and then you see prices moving again to test areas like 5,600. Now this only happens as well if the DXY continues moving to the downside, say to test areas like 104. If this doesn't happen, then you can use a trend line just to give you this visual representation like right here, and once this trend line gets violated, you wait for that correction, and then you probably see prices moving again to the downside to test an area like 5,500. So combining the DXY, combining the psych numbers, combining the trend lines as well, you can make informed decisions like this coming into next week. So I'm still holding this position as well on the S&P 500. So let's look at the last pair, which is gold, and this is an interesting one as well. So we took this buys, I took this buys say around here, and then I capped it out at this point. I did cap out the buys at this point, and price is still moving again to the upside. So how do we get involved on a move like this? It's quite simple as well. You can see price is taking out areas like this, making higher highs, pulling back and giving you higher lows, which is just a characteristic of an uptrend. So going over what is happening on the DXY, if the DXY has to move to the downside, we should expect, say, a pair like gold to continue moving again to the upside. So because we came through 2300, massive move from the sellers, inability to go through 2300, the next level we're looking at for gold is to test, say, an area like 2400. So once we test 2400, then we need to be patient. And when you look at the move on gold, we're very close. So we're very close to 2400. So in a situation like this, if you really want to get involved in a move like this, you need to see prices coming back, say in terms of a correction. And once this correction comes in, it might test an area like this, and then you look for another opportunity to take the buys. So now this might be difficult as well, because we might get this correction coming in, we get to an area like this, and then you see prices moving out, get a correction, and you see gold tanking to the downside. If this doesn't happen as well, you could see gold continuing its move again to the upside to even go past, say, 2400. So now this depends on what happens as well on the DXY. It depends on other factors as well. The DXY is not the only factor, but it's just like it's like a tool I use just to help me make informed decisions. So sticking with what we see on the hourly time frame, to get involved on a position like this on gold, we should wait for a consolidation to come in or a correction to come in, and then we'll look for an opportunity to take prices again to the upside. Now, how is this correction going to come in? That's where it becomes very difficult, because we might have something like this, which is just like a consolidation as well. But when you look at it, so when you piece this out on lower time frames, you can actually tell it's a corrective move, and you should see prices moving to an area like this. So that's the only way I'm going to get involved on a pair like gold. I need to see the consolidation coming in. I need to see the correction coming in. Then we can take prices to the upside. Now, it's also very important you look at previous price action to help you make an informed decision as well. So when you look at this from 2300, we had an impulsive move. We had a massive consolidation here, which is just a correction. We had another impulsive move, massive consolidation, which is just a correction as well. So we could expect a similar move here, another correction, and then you see prices going to the upside, or you get a correction, you see prices moving here, inability to go to the upside, break, and you see prices moving to the downside. So that's it, guys, for this week's market focus. So just a quick recap: DXY, I'm expecting prices to drop in a corrective form. US30, I'm expecting prices to move to the upside. NAS100, expecting prices to move to the upside. S&P, prices to move to the upside. Gold, prices to move to the upside. This I'm a little bit skeptical, because we're very close to 2400. Once we cap 2400, it might be a decision point as to what price really wants to do. But with the other pairs like US30, there's enough room to the upside. NAS100, there's enough room. The S&P as well, there's enough room. And with the DXY, there's also enough room to move to the downside. The only pair that gives me a little bit of doubt is gold, because we're very close to 2400. So I'm going to watch this closely. I'm going to pay attention to what happens on these pairs, and I'll update you guys next week when we do the market focus, if we had any opportunities that were tradable. Alright guys, so that is it for this week's market focus. If you found this interesting, don't forget to hit the like and subscribe button, and use the comment section. Tell me what pairs you're looking at, what pairs is like it's quite difficult for you to analyze, and we'll probably drop those ones during next week's market focus as well. Alright guys, that's it for this week. Thank you. Bye for now.